Hello and welcome again to the Trading Wife Stock Market Chat. I hope that you have sound this time. I wish I could remember how to check that. Unfortunately, let me see if I go down here to the, yeah, I'm not really sure. But in any case, we will just keep going. How about that? Today is January 29th. Thursday of the year 2015, and again I'd like to thank BTF TV for providing the venue to do these broadcasts. I hope that I'm able to get the technical stuff figured out. I completely blame myself, and it's been a bit of a challenge, frustrating to say the least. So I'm going to go ahead and put you on some charts here. Hopefully you are now seeing charts. And I'm also hoping that we have sound. Sound. Okay. Taking a look at the SPY. We've certainly pulled back again. We have not been able to. I need to put my glasses on here. Don't have my glasses on. We have not been able to get above and stay above making new highs ever since mid-December or so, and I suspect that we are just in a very shallow downtrend. You see this trend here now from that high is a very shallow downtrend. We're still in this range that we've been in here since I'm going to say the beginning of December, when we reached this top here, and we never really got above that top. This spike doesn't show on the S&P. That's only a SPY remnant, so I don't put much into that. If I put it on SPX, you can see that there's no spike there. So this line does make a new high in mid to late December, and then has been pulling back from there in a very shallow pullback. Certainly have the impression that markets are struggling to make a real correction, a really deeper correction. On the other hand, we're seeing these sort of rolling over tops here, and markets are also struggling to make a new high since mid-December. You can look at that both ways. You can see that as, oh, it's struggling to make a new high, therefore it's rolling over. You could say it's just making a very shallow pullback, as opposed to these sort of more sharp, steep pullbacks. We've seen more shallow pullbacks before. It's not a new thing. Again, I reiterate that we're in a range, and this just seems to be consolidating from this top here. Where it goes from there has yet to be seen. Oh, good, you have sound. I hear I see a yes in the chat room, so that's really great to see. So I'm just going to point out that it just sort of has this little triangle in here, and it's consolidating the higher move that it made in December. This could become a deeper correction, but at this point we're still holding the 200-day, and they seem to come in and buy a lot of dips. The surprise, of course, was I think a lot of folks expected Janet to come out, or the Fed to come out and say yesterday that they were not going to raise rates, and that on the other hand was going to make the market rally. It didn't. It also wasn't something that was unexpected. In previous months, people were really afraid that the Fed was going to come out and say they were going to raise rates soon. This is probably the first time, I think, that I've seen the media actually say ahead of time that they didn't expect them to raise rates, that they expected them to remain, as they quoted, patient with raising rates. I feel that they've said that all along from the beginning. I think that the moment that they ended QE buying the asset purchases, that Janet said right then and there that until all the numbers lined up for the economy, that she was not going to raise rates, and it was very much until then. But media came back and kept saying, oh no, she said she was going to raise rates, and they seemed to miss the fact that she said except until the economy numbers are at certain levels. So she's not raising rates. The economy numbers aren't there. Obviously, we had some poor economy numbers come in the past week or two, and that has been aided by all the stuff that's going on in Europe. The euro has been coming in a lot. China's slowing down, etc., and of course the big drop in oil. Now, there are a lot of doom and gloom folks out there who are saying that this drop in oil is akin to a pre-market crash, that it's going to be like the subprime crash. But I think there's a big difference here in that there are certainly people that will be affected by the drop in oil. There are certainly banks who have made loans that are likely to default at this point. Lots of debt that will come in from this. But everyone's not invested in oil. When the housing market crashed, everybody, you and me, were probably both invested in housing. Certainly I was, and my house that I had purchased in 2007 is still not at its peak level again. I know that that's not true here now that we've moved to the Silicon Valley and the Siliconomy. Housing is peaking anew in the Silicon Valley, but that's not true, and we've seen the housing numbers. That's not true for the rest of the country. We are simply still recovering from that. And we were all invested. I mean, from the poorest people who had gotten all those subprime loans to the big banks who were making horrible, horrible decisions and giving those subprime loans, we were all invested in housing when the whole bubble collapsed. We are not all invested in oil. Only very specific people are invested in oil, and others will benefit from low oil. So I don't think it's going to become the same kind of crash. We've yet to see that. Of course, markets don't move on all this macro talk. Markets move on what market makers and investors think about it. So it's all about sentiment, and it's all about eventually that's where flow is. So when we see the money moving in and out at this point, we're definitely seeing more money coming out than moving in, but I don't see it as a big, drastic, huge. It's not even as bad as it was in October. So when we saw that very, very steep decline, that looks like, it was menacing. We lost the 200-day moving average. That's criteria for a lot of people as well. I know a lot of fundamental analysts that say as long as we are holding the 200-day moving average, the market's not broken. The market's not broken until we lose that. We lost that in October. We didn't lose it for very long. It was only a few days before we bounced from below that off of the same trend line from 2009. But that trend line from 2009 is still intact, and I can show you that. Let's go back to the chart of the S&P. Hopefully you see the chart of the S&P. And yes, you see charts. Okay, so that's good. But when we pull this back to let's go ahead and put this on the weekly. And we can look at this weekly chart. That trend line there is still intact. It's still in an uptrend. There's really very little question about it. Has it been consolidating? Yes. You can see that it started here in 2009, and then it didn't even really create this trend line until it pulled back in 2011, and then since then it's been hugging it pretty tightly and consolidating this line. This channel has been a much tighter channel than what it was when it first started out. Not surprisingly, because it made such a huge drop from that big crash. But at this point, I don't see that we should be calling for doom and gloom and crash at this point. We're well above a lot of strong levels of support in here, and to me it just looks like we are consolidating, and there's really nothing that tells me that this is going to be the start of a huge deep correction. Can that happen? Absolutely it can happen. Here, absolutely that can happen. We just don't know that yet. We just don't see that yet. And I know a lot of folks love to try and call tops and love to say, well, we've got that dumpling top that's going lower. I've heard it called various things. I've heard people say there's a head and shoulders pattern, which I don't really see a head and shoulders. It's a very sloppy one if it is. I've heard people call it other things. I've heard people say that, well, we didn't make a new high since December and we're coming down from a lower high. but I would beg to say that we just haven't finished that correction from that high in December yet. My stocks personally are, not doing well at this point, although at least I see that the CIEN has bounced a bit. This clearly was not looking good. It's lost this trend line here, so let's take that one out. But it did manage to get there's a clear line of support. I don't know if you can see this line of support here that's from December 22nd and then the middle of January. There's clear bottoms in here. It stopped at that same exact spot below the 200-day moving average, but has since recovered it again. It's bounced back above and is approaching the ADMA, trying to get back above that. So my position at this point is down a little more than 5%, and I will give it till the end of the day to see if it's able to recapture that 8-day exponential moving average, which, for those of you who don't know, is my trigger line, the 8-day exponential moving average. I use it actually on all time frames. I'll use it the 8-week exponential moving average on the weekly time frame, etc. It is my trigger line. The idea came from Rick Sadler while he was a student of Stephen Bigelow's. I first came across it with Stephen, and it's truly an amazing tool. Stocks tend to stay above the ADMA once they are above it and continue in an uptrend, and they tend to go down and stay below it once they're below it, and that includes the indices, so that's a really interesting thing. PIEX was doing so well for me, and unfortunately, let's go ahead and take a look at that as well. It has lost the ADMA today. Yesterday could have been construed as a sell signal with this sort of spinning top candle followed by this bearish engulfing candle, but until it lost the ADMA, it was really hard to say that. Now, of course, the overall market is giving it a hard time, not being supportive. It's very difficult in a distributive market to have longs do well. In a distributive market, most stocks are going down. That's why the market's distributive. On an uptrend in an accumulative market, most stocks tend to go up. So it's much easier to make positions work when you are trading with the trend of the overall market. I got into these stocks because my timer had turned green on some bullish action last week, earlier this week, as we got through the ADMA and put in some good candles. But then obviously, ever since the announcement, we've been in a downtrend short term. And that has manifested itself in this PEIX, which is starting to look like what we call a dreaded H pattern in here. Certainly I will be watching that ADMA at the end of today. If it can't get back above it, I will be dropping that position. Going back to the SPY, since we mentioned the timer, I would like to point out that this is where it turned green. You had put in a bullish left-right combo. There's the hammer there, or the doji candle there, and then the bullish engulfing through the T-line. My T-line is, the ADMA is the T-line, the trigger line. Mine is red on my chart, so if you can see that red line in there. And then it clearly confirmed that the next day, and that's when I started getting into stocks. There was no reason to think that there was any problems in here until it lost the ADMA, and I expected for it to recover from that after the Fed. I shouldn't say expected, but I thought that it was going to recover from that after the Fed came out and announced that they were not going to reduce rates or raise rates. But it didn't, and again, I think it's because it was already expected that this happened, and we got this huge red Marubozu candle, creating now a left-right bearish combo and closing below the ADMA, variably turning my timer back to red. So yesterday my timer turned back to red, and we're just holding on to see how far we're going to go. At this point, it does seem to have stopped below the 200-day moving average, as well as the bottom of this this range that we've been in for the past couple months, and impossible to tell from here if it's going to recover from here or continue lower. I can see either scenario from here at this point. We will just have to wait and see. A few of the other positions, the metals were acting well for a while. They were not only started to move up with the market, but they also were acting as a defensive. They started moving up on their own, basically until today and yesterday. And yesterday we pulled back, but my PAAS had recaptured and held the T-line at the end of the day, so I decided to give it another day, but it has since lost it today, and it would need to recapture that T-line again for me to stay in it. So this one is also on my chopping block again. Unfortunate, it was up really big, and I had said when it was up 11% that I was likely to take some off, but I had a lot of other things going on, and I didn't get to do that. So unfortunate, but it is what it is. This TASR, Taser International, is hanging in there pretty well. Pulled back a little bit this morning to the 21-day moving average, but is back above the T-line. So certainly willing to give that some time in here. What did I hope? I didn't hope. I expected. I never said I hoped. I said I expected. I never hope. Sometimes I expect, but I never hope. The only things that I hope for in life is that my daughter recovers well and has a healthy, happy life, and that she doesn't. I say recovers well. She's had a bad knee, which folks in my chat room know. So there we are with that. I'm not seeing any requests for charts from you guys. Let's take a look at what the market is showing us. There's this MX here, Magnachip Semiconductor, looking like a good chart, bunching up these moving averages in here and then putting in a nice open Marubozu candle. ENPH also in the semiconductor sector. Here you have a doji followed by a gap up open and a green candle creating a trader's best friend. So there are some good looking charts out here. Look at this, LRN is doing well. JetBlue doing very nicely, and what was funny was yesterday, even when with oil down, airlines were even pulling back, as you can see, put in this sell signal in here. I know Sylvan was in the Hawaiian Airlines, which is also coming back. Let's see. Doc likes love. That looks still great. AAL also recovering. UAL also recovering. Look at that. I mean, these charts are looking good on the airlines. Oh, are we back on me and I didn't go back to the... I'm so sorry about that. Okay, that's my fault. Let's go back to the charts. Okay, UAL. Check these out. Look at, that's a really nice looking J-hook pattern in there. Was a little bit concerned when even the airlines were going down yesterday, but there's Love looking good, Southwest Airlines. We also have JetBlue, which is breaking out here, looking really nice. American Airlines trying to recover as well, and Delta Airlines also back up through the ADMA after putting in a bearish left-right combo yesterday and closing below the ADMA. So the airlines are doing well, looking really good here. Plenty of stuff that I can go ahead and I think that I will put on the slideshow because there are some really nice looking stocks in here. Let's go ahead and stop from the top. Surprisingly, but that says a lot, I think. LEN, look at that. Even the construction, residential construction, doing better. Dunkin' Donuts. Gigi loves to say that America runs on Dunkin'. Going to let those flash through a bit because I think it's really interesting to see how many nice looking charts there are. So Gigi, I know I promised you a song, so I actually had it all ready to go, and then I had all the sound problems and the technical issues, so I didn't get to sing you a song, but the one that I had picked out for you was this. Whenever I wake up, Before I put on my makeup, I say a little prayer for you. So there's your song, Gigi. Going through these charts, I'm really, really impressed by how many nice-looking charts there are. Once again, Valero Energy Partners. Look at that. That's really interesting, isn't it? Even some energy stocks doing well. So overall, my market timer is red, but I see a lot of strength still in certain sectors and in certain stocks. I believe that we are still just having a little mini correction. I don't think that this is the end of our bull market at this point. Overall, the underlying direction of the market is still up, and I have faith that here's what I have faith in. I have faith that I will know when the market has lost support and is truly going into a downtrend. I believe that it will be very, very clear before we actually have a big crash that we're heading there, and I don't believe that it's clear yet. So that's pretty much where I stand on that. I'm going to switch back over to me here. Just say again, thank you all for watching, and I apologize again for all of the technical difficulties. I know that has been frustrating for all of us. I'm watching all these stocks go by, all these charts go by on my volume surge scan, and I see a lot of really good-looking setups still. A lot of stocks that have not really taken a hit, even in this downturn. I don't think that we're in the imminent crash. I know there's been a lot of news articles and media reports and a lot of doom and gloom and folks saying that this is it, we're going to crash, it's the end, this is the beginning of another big crash. But crashes don't tend to happen that often. I know it's a really volatile situation right now. There's a lot of fear in the markets. There's a lot of fear globally, all the troubles that are going on in Europe economically, and as well as China slowing down. But I think that Europe's QE is going to hold them up. I think that they did it before that they had a real crisis. By the time we did our QE here, we really saw a huge crash in the markets. They haven't seen that yet in Europe, so they're starting the QE before it happens. I think it can be avoided. So we'll just have to wait and see and watch the markets. Thanks for showing up and coming by, and again, thanks to BTFD for giving me this venue, and I will continue working on my technical difficulties, and hopefully we'll be able to put out some more shows that are more timely and better well planned out. Have a great day, everybody. Remember, my market timer is red, so I don't recommend putting on any longs at this point. But I don't recommend going short either because I'm not seeing a big move to the downside at this time. Have a great day. Talk to you soon. Bye-bye.